Welcome back to Investing Talk Podcast. Today we're asking a question that seems to be on a lot of investors' minds. Is energy fuels a good time to consider buying right now? We've pulled together insights from quite a few places, stock analyses, the company's own financial filings, recent market commentary, really trying to give you a full picture. Our goal here is just to cut through the noise, give you the key nuggets of information so you can feel genuinely well-informed about this company's prospects. And hey, before we jump in, if you find these discussions helpful, please do hit that subscribe button, like this episode, maybe leave a comment below. And definitely let us know in the comments if there's another company you'd like us to take a look at next time.
Okay, so let's unpack this. Energy fuels. What exactly do they do, and why should we be paying attention?
Right. Well, energy fuels is interesting because it's not just one thing. It's the largest producer of uranium here in the U.S. That's its core identity, you could say. But they're also a leading producer of rare earth elements, REEs, and vanadium. So there's some important diversification there.
Uranium and rare earths. Okay, critical stuff. Exactly. And a huge piece of their story is their infrastructure, specifically the White Mesa Mill. You have to understand, this is the only conventional uranium mill with operating capability in the entire United States.
The only one.
Yeah, it's a massive strategic advantage, almost a unique position in the domestic supply chain.
That definitely sounds like a powerful position, especially now.
Yeah.
So, all right, let's look at the money side. How's the financial performance been? What are the recent numbers telling us?
Well, looking at the financials, it's kind of a mixed bag, a classic growth costs money story, you know. For fiscal year 2024, their total revenues hit about $65.4 million. That's up nicely from $54.4 million in 2023.
Okay, so revenue's growing. That's good.
It is, and it was mostly driven by more uranium and rare earth sales. But the other side is the net loss for 2024 actually widened. It was around $28.9 million, up from about $24.5 million the year before.
Widening losses despite higher revenue. Why is that?
It points to costs. Their gross profit margin in 2024 was 12.5%. Higher uranium prices helped that, sure, but it was offset by significant production and development costs. They're investing heavily.
Investing in what specifically? Is this ongoing or more like setup costs?
A lot of it seems tied to getting production ramped up, getting the White Mesa Mill ready for more rare earth separation, and developing new projects like the Donald Project for REEs. So it's investment in future growth. Management was pretty cautious in their commentary, no firm earnings guidance for 2025 in the 10K filing, mainly citing that uranium price volatility.
Makes sense. Any recent signs of improvement?
Actually, yes. The Q2 2025 results, which came out more recently, showed the net loss shrinking a bit, $21.8 million compared to $26.3 million in Q1, so maybe starting to turn a corner there. And for the rest of 2025, they're expecting to process about 670,000 pounds of U3O8 in Q4, aiming for higher production overall as demand picks up.
Okay, so investing heavily, losses widened, but maybe improving recently. How does the balance sheet look? Can they afford these investments? How healthy are they financially?
This is actually one of their biggest strengths. Their balance sheet is quite healthy. As of the end of 2024, they had almost $100 million in cash and cash equivalents.
Yearly $100 million cash, okay.
And here's the picker. Zero total long-term debt. Absolutely none.
Wow. Zero debt. That's rare in this industry.
It really is. It gives them an asset-light balance sheet, lots of liquidity compared to peers, makes them less vulnerable.
But is there a downside to that? What about cash flow from operations?
Good question. That's the counterpoint. Operating cash flow for FY 2024 was actually about negative $13.6 million. So while they have cash reserves, their core operations weren't generating cash that year. They were consuming it.
So they're burning cash on operations for now.
For that period, yes.
Yeah.
But they did maintain strong working capital, over $250 million as of Q2 2025, which means they have plenty of liquid assets to cover short-term needs. It reinforces that investment phase idea.
Right. So strong balance sheet, zero debt, but currently negative operating cash flow due to investments. Given all that, how do they stack up competitively?
Well, as we said, largest U.S. uranium producer, leader in REEs and vanadium too, which is good diversification. And that White Mesa Mill is it's a unique, powerful asset. Can't overstate that.
But challenges.
Oh, definitely. Competition is intense. You've got huge global players in uranium, Kazakhstan, Canada, Russia, and the prices for both uranium and rare earths are notoriously volatile. That's just the nature of the beast in commodities.
Okay, let's shift gears a bit. Let's look at the stock itself. What are the charts saying? What's the recent price action and technical picture telling us?
Sure. So looking at early September 2025, the stock was trading mostly between $9.50 and $10.30 for a couple of weeks. Kind of a moderate rebound after the whole sector saw some bumps. Key levels to watch. Short-term support seems to be around that $9.40 and $9.60 zone. Resistance looks like it's up around $10 and $10.50.
And the moving averages. Where does it sit relative to those trends?
The 50-day moving average is right around $9.60, so the stock's been hovering near that. The longer-term 200-day average is down near $8.10, which clearly shows that longer-term uptrend they've been in since late 2024.
What about momentum? Any signals there?
The RSI, the Relative Strength Index, is sitting in the 55 to 60 range. That's generally neutral to maybe slightly bullish momentum, not screaming buy or sell. And the MAN-CD indicator is just slightly positive, but no strong divergent signals popping up right now.
So fairly neutral momentum, but within a longer uptrend.
Pretty much. But you have to remember, volatility is elevated, uranium prices swinging around, plus just general macro uncertainty. It keeps things choppy. Though, looking back a bit, there were some strong technical buy signals after a bottom they hit around July 9th that led to a pretty impressive 79% run-up over about 3 months.
79%. That's right.
Yeah, but more recently, there's been some volume divergence, price going up, but maybe not with the same strong buying volume behind it. That warrants a bit of caution for the near term. Could mean more volatility ahead.
Good heads up. Okay, beyond charts and numbers, what's been happening with the company recently? Any significant news? And how's the general sentiment?
Yeah, there's been quite a bit happening operationally. Back on August 6th, 2025, they put out their Q2 results. They confirmed their uranium production guidance and, importantly, highlighted those increasing rare earth sales again. Progress on diversification.
Okay.
Also in Q2, they hit record uranium output at their Pinyon Plain mine. This is a really high-grade mine.
Higher grade means lower costs, usually.
Exactly. It led them to project lower production costs, potentially getting down to $23 to $30 per pound by the end of 2025, which is quite competitive. And another big one, they got final regulatory approval for the Donald project. That's key for scaling up their rare earth production and starting heavy rare earth separation.
Heavy rare earths like dysprosium.
Precisely. And that leads into September 2025. News investor focus really sharpened as they got closer to producing their first rare earth oxides. With that dysprosium expected basically any day now. Big milestone.
Lots of positive operational steps then. What about insider activity? Are executives buying or selling?
That's always interesting to watch. We did see some insider selling recently. A director, Dennis Lyle Higgs, sold about 30,000 shares in mid-August.
Selling. Okay. At what price?
Average price was around $9.80. Now, it's important context, he still holds a very significant number of shares. So it wasn't like he dumped everything.
Right, not a complete exit. Any insider buying.
No records of any significant insider buying in the last 3 months or so.
So one director sells a chunk, but still holds a lot, and no recent buys. How are analysts and the public reacting to all this?
Analyst coverage is interesting. There's a strong buy consensus rating overall.
It's positive.
It does, but the average 12-month price target from those analysts, around $9.31, was actually below where the stock was trading recently.
Below the current price. How does that work with a strong buy?
Yeah, it's a bit unusual. It could mean analysts haven't updated targets quickly enough, or maybe that the market has already priced in a lot of optimism, potentially making the stock look a bit stretched relative to those targets. Needs watching. As for general sentiment, like on social media, it's kind of mixed. You see a lot of optimism among retail investors about uranium stocks in general, the whole energy transition theme. But there's also some chatter and maybe concern about that insider selling and just the general volatility of the sector.
Okay, that gives us a good sense of the current vibe. Looking ahead now, what could potentially move the stock? Any catalysts coming up? And what are the major risks investors need to have on their radar?
Sure. There are definitely potential catalysts, both near-term and longer-term. In the short term, say, the next 3 months. Well, September 20th is a date to watch for that first delivery of dysprosium oxide. That's a big proof point for their rare earth strategy. Then September 30th, you get the Q3 institutional ownership filings, see who's been buying or selling big chunks. October 8th brings Q3 ETF and index rebalancing, which can sometimes cause short-term price swings.
Right.
Earnings. Yep. October 30th is the target for their Q3 2025 earnings release. That'll be critical to see if that operating leverage is improving, if margins are getting better. And maybe around November 29th after Thanksgiving, there's usually some kind of industry resource update.
Okay, that's the near term. What about longer-term drivers?
Longer term, the big picture stuff matters. Supportive U.S. government policies for nuclear energy and domestic uranium supply, that's a major potential tailwind. Successfully scaling up rare earth separation at White Mesa, especially if they land some solid offtake contracts for those REEs. And unfortunately, perhaps, but relevant for them, geopolitical tensions that disrupt global uranium supply could definitely favor a U.S.-based producer like Energy Fuels.
Makes sense. Any rumors or more speculative things floating around?
There's always industry chatter. Some talk about potential partnerships for the Donald Project, maybe with Asian or European REE players. Speculation about new long-term uranium supply deals with U.S. utilities. That would be huge for revenue stability. Also, rumors they might be applying for some of that upcoming Department of Energy funding for critical mineral supply chains.
Government funding could be significant.
Absolutely. And one more, just given the stock's run-up, there's always the possibility it gets added to a major mid-cap index, which could trigger buying from passive funds.
Okay, lots of potential positives, but we need the other side too. What are the primary risks here?
Crucial to consider the risks, definitely. Stock-specific ones first. Well, number one is the volatility of uranium and rare earth prices. Their earnings are very exposed to those swings, especially since they rely heavily on spot sales right now. Related to that is the lack of long-term uranium supply contracts currently. That increases the exposure if prices suddenly drop. There's also the question of reserve life. At some of their mines, they'll need ongoing investment or acquisitions to keep production going long-term, and, of course, operational risks. Things could go wrong at the White Mesa mill, or there could be delays in getting all the regulatory approvals needed for the expanding RE processing.
Okay, those are company-specific. What about broader market or sector risks?
The whole uranium market is sensitive to big shifts, changes in global regulations, government policies on nuclear energy anywhere in the world, actions by those big international competitors, all that can impact supply and demand dynamics. And then there's the macro environment. Rising interest rates, general economic uncertainty that can make investors shy away from resource stocks, which are often seen as cyclical and higher risk.
Right. So bringing this all together then, after looking at the fundamentals, the technicals, the news, catalysts, risks, what's the overall picture? Is Energy Fuels a buy now? What's the verdict?
Okay, boiling it all down. I'd give Energy Fuels maybe a 6 out of 10 right now. The investment thesis is this. You've got a company with definite strengths. That strong balance sheet, zero debt, good cash is a huge plus. And the strategic infrastructure, especially White Mesa, makes them a clear leader in U.S. uranium.
That's the bull case.
That's the bull case. However, short-term earnings are still really volatile. That heavy exposure to spot prices is risky, and the negative operating cash flow shows they're still in that heavy investment phase. Profitability isn't consistent yet. Long-term, yeah, the outlook benefits from those big trends, U.S. energy policy, the push for domestic critical minerals, but you can't ignore the commodity price risks or the execution risks on actually delivering these growth projects.
And the insider selling?
It's a factor, a modest negative, I'd say. Not a huge red flag given the context, but something to note. So, bottom line, who is this stock for? I'd say it's probably better suited for maybe tactical trading around swings in the uranium sector, or for investors taking a long-term speculative bet on the U.S. uranium and rare earth story. But you have to understand, it comes with above average risk. You need to be comfortable with that volatility.
This has been a really fascinating look at a company that's right at the crossroads of critical minerals, energy policy, geopolitics. It's complex. What's one final thought you'd like to leave our listener with?
Here's something to think about. Given Energy Fuels' unique position, that mill, their expanding RE work, how might global energy policies and these geopolitical shifts we keep seeing, how might they fundamentally change the risk-reward picture over the next, say, 5 or 10 years? Forget just the day-to-day commodity price swings. Think bigger picture, the strategic value. How does that evolve?
That is a powerful question to chew on. We've definitely covered a lot of ground today on Energy Fuels financials, market moves, catalysts, risks. Hopefully this discussion has given you a much clearer understanding. Thank you so much for joining us for this analysis. And remember, if you got value out of this, please subscribe, like the episode, and drop a comment below, especially if there's a company you want us to tackle next. Your input really helps shape these conversations. Until next time, stay well informed.